Hello, do I use moving averages for swing trading? Daily chart analysis explained. We are going to analyze two stocks from our watch list here, and the first one is MMC. So I don't use moving averages to swing trade. I tried, but especially in 2024, at the beginning of 2024, but once I noticed that you can swing trade, there are strategies where you can swing trade without moving averages. I took them off of my chart and I just swing trade without it, and I did that in 2024 for the rest of 2024, and I'm doing it in 2025 as well. So we have MMC, and as you can see, there are a lot of arrows on the chart, and the arrows just shows the arrows facing up shows where we bought it, and arrows facing down shows where we sold. So in 2024 we swing trade MMC using short option long swing trading strategy, but in 2025 we are using long option long swing trading strategy. So in 2025 we purchased it around this support line and we sold it when it reached a new high. When it pulled back to the support line that is supporting the upside wall of the mountain, we purchased it again, and when it reached a new high we sold it and we just stopped, so that when it pulled back to the support line and start going up from there, we could buy. So I don't use moving averages. It does not mean they don't work. I'm sure people that use them will find them useful. I just noticed that it just at least the one that I use just emulate the shape of the chart. So since I have the chart and I can just focus on the chart, I don't want the chart to be crowded. I already crowding it with the lines that I'm tracing, and I just prefer to just keep it like that. So our strategy consists of determine ahead of time where you want to buy the stocks. And for the long up to long swing trading strategy, you want to buy the stocks at the valley of the mountain, and I'm calling the swings of the chart mountains because it will go up from the bottom, it will go up and then go down. So the valleys and the mountains. So you want to buy at the valley when it start going up, and then sell it at the peak before it start going down again. So at this stage of the strategy, I want to try to buy and sell it at one side of the mountain, when at the valley when it start going up, and sell it around the peak before it start going down. So on one side of the upside wall of the mountain, on the rise side of the mountain, buy and sell it there. So, and it's not a error proof or anything like that, but the more you are doing it, the more you'll find what is working for you and what is not working, and then you'll sharpen the strategy. So with MMC, today is October 16, 2025. The market has not opened yet, and yesterday the market closed on red. The price at the end of the day was lower than the price in the morning when the markets open, so the price dropped. But you will notice that MMC is at the support line that we like to buy. So there are multiple support lines that we trace, and we color code some of them, and those are the one we like to buy the stock at. So you want to find the support line that looks like the valley of the mountain that has multiple touch point from the price fall back to, pull back to, and then bounce back from there, that you feel like it will come back to those support line again, or might come back to those support line lines again, and you are willing to buy it that low. So when it pull back to where it will make lower lows. When it reach the support line, sometimes it will pull below it and start going up. It will start making higher lows. And I like to look at 3 higher lows in average before I buy. So we have this low here that is about the same as this one, but this one is higher than this one, which is higher than this one. So we have some higher lows going on here, but it was not enough. It pulled back down again. We have lower lows here, and down it start going up. And usually when I see a 2 or 3 higher lows, I'll buy at the first or second green bar that follow that pullback. And a lot of times, or sometimes, it will pull back on me again for a while before it will start going up. So I tend to enter the trade around the support line that I like to buy it, but in most cases, little early. And that is a skill that I'm going to continue working on to sharpen. And what I'm noticing is higher lows, 3 higher lows on the same side of the swing may not be enough, and might need to wait for a change direction of the chart, maybe twice, and if I see an uptrend, I can get in. I don't know if it makes sense, but let's take an example. You can see, for instance, here that when it was going up, we have the red bar. Those are the pullbacks. That's what I try to compare. The pullbacks delimited by the green bars, that I like to compare the last one of the cluster to the previous one to see if I'm having higher lows. But what you can notice that when I purchased it here, I sold it there, after 2 higher lows there. But what I'm thinking is maybe wait for a reversal or a change in the direction twice or 3 times before I get in. And yes, sometimes depending on the chart, it might leave the area that I wanted to buy. I might buy at a higher price or so, but it's all about testing, watching, or observing, analyzing to determine what is working for you and what is not working for you, and draw a formula from what is working for you so that you can systemize it. You can just draw a formula from it and say that is how you'll be doing it. So at least that is the way I approach my swing trading. So now, instead of buying it, because this is the support line, so it pulled back to it and start going up, instead of buying it somewhere here, if I did that, I would have been in the red by now, because it pulled back, went up and pulled back. It has not gone past that area yet. The price is on the y-axis and the date is on the x-axis. So I'm still observing it, but then I'm thinking, so instead of buying it on one side of the swing, when I'm seeing I'm seeing 2 or 3 higher lows, should I wait to see, in fact, a change in the direction, and then a change again, and compare that obvious lows to have, do you see the way I trace this one here? We have obvious low here, not just this low here, compared to this one, they're all on the same side of the swing. But if I'm comparing this low and this one, they are not, this low is not quite on the same side of the swing, because it changed direction and then went up, changed direction again. So comparing this one to this one to this one is what I'm thinking, that maybe should I give a try to that, instead of just comparing the pullbacks on the same side of the swings before I make my entry around the support line, because I could well have purchased it here and then it'll pull back on me again, and I will stay there until it start going up and past where I purchased it before I start noticing a profit in my portfolio for this purchase. And instead of that, waiting for that to go up where it's going up, pulling back gently, but then change direction. This is completely changed direction because it was going up here, but then even during this up there is pull back in it, but it's still along that same direction, but then it pull back. So if I wanted to use that strategy, that second strategy for my entry point, I will compare this low to this one, and this one is lower than this one, so I'm still seeing a downtrend here, therefore it's not a buy. But then and then it changed direction again by going up. So we have this, and then it changed direction again. So yesterday the price dropped, so pretty much you can see that it went this way, but we have to see a green before we can compare this red to this one. If today is a green bar, it's not even enough. We have to actually see a change of direction again before we can compare the obvious low that we will have here to this one to see if it's higher up compared to this one. So that is what I'm trying to see. Will that make it easier for me to enter the trade without entering it too early? But again, I'm observing it. So far we purchased it and sold it twice in 2025 with profit, but getting it again at the support line here, we are trying to see at what point we will get in. It is around the support line where we want to buy. The thing is to try to just make sure it's down, going down, is getting ready to start going up before we buy, is all we are trying to determine. We know we are going to buy around that support line. It's not going to be exactly at the support line, but around it, when we have a confirmation that is down, going down, and is ready to start going up. That's why we are waiting for that, for few higher lows around that support line for us to buy some share. So that is pretty much our chart analysis explained. So every day or so we will just try to compare where the price is to where we want to buy to see if it's getting close, and this one is pretty much close to the support line, so therefore we will pay close attention to what it's doing there to see if it's ready for us to buy some share or not. So now that I zoom it out, you can see that this is a little bit lower than this one, and we want to see that zigzag here as well, so that we can compare that next obvious V shape to this V shape to see, let's use that V shape to see if the next V is going to be higher up than this current V. And then we can buy few share at the first or second green bar that will follow a pullback. But I'm still working on it, but a lot of time I just like to, once I start seeing the upside of the V at the support line and I see 2 or 3 higher lows on that upside of the V, I'll buy some share. And sometimes it will work when it will just continue going up from there or pull back a little bit and start going up from there, but sometimes it will linger more around the support line before start going up. So this is not a buy today, it's just about one that we will keep observing. So the next one we are going to analyze is MRVL. MRVL is highlighted because we purchased it and we have not sold it yet. and MMC we color coded red because again is at the support line, and it needs an eye on it for us to see when is the right time for us to buy. MRVL, and by just waiting, it gives you an opportunity to just keep saving in your account to have money ready to buy the stocks when it's ready. So MRVL, again, we have this support line that we like to buy at, and yesterday the price went up. That's why it's green. The price at the end of the day is higher than the price in the morning when the market open. Therefore the price went up yesterday, but we purchased it already. So now we are going to be thinking about when we are going to sell that stock. But let's talk about the entry point here. So we have two support line, and you'll notice that we purchased a little bit early. We purchased it around this support line instead of this one. So it turned out to be one that is now, it didn't want to use as a valid line. So it pulled back to this one. So you can see that we stay in it for that time frame until it start going up, and right now it is higher than what we pay for it. So we bought it here, we have not sold it yet. That's why we have the arrow there for what we pay for it and when we purchase it, and that's where it is. So this one is profitable in the account. But now let's zoom in to see. So you'll notice that we have few pullbacks there, and we bought it at the first or second green bar that follow a pullback. So we have this one. In fact, this one is a little bit lower, pretty much about the same level as this one, which is higher than this one, and then we just bought it. So when we bought it, it pulled back to this support line, remain there a little bit, and then start going up. So we purchased it in March, and we remain in the trade until here before it start becoming positive. So we remain in the trade for 3 more months negative, because when I put my mouse here, you'll see the corresponding price and you'll see my line, and any bar below that show the time frame that the price was below how much we pay for it. So we remain in it for 3 months before it starts generating profits, and that's why we are trying to see if we can improve that so that we don't remain that long in the trade negative before it start going positive. But maybe it may not matter, knowing that we will remain in the trade to accumulate a lot of profit before we sell it, but it is worth improving the scale. So now, instead of buying it around one side of the swing, I'm thinking that maybe should we wait for the chart to change direction, because here is going up, it was going up, and then it changed direction to make a V here. So that'll be one V. We have the upside down there, then we have this one, but then we have this one, we have that one, so we have those V's, and we have this one, we have this one, and so forth. So if we want to use that again, entry strategy will be to compare those V's, those obvious ones. So this one is a little bit lower than this one, which is higher than this one, will be more like the green bar instead of that one. But either one, this or those two are higher than this one, which is higher than this one. So based on that analogy, we could have purchased it at the first or second green bar that follow this pullback But again, we will wonder because this pullback is lower than that, so that will make us think, is it going down? And then we might decide, no, maybe we need to wait again to see another V. So that will pull us somewhere here. So this V, which is little bit, just barely though, so this V is higher up to this one, which is lower than that one, which is higher than this one, higher than this one. So, but having those, then we might buy it somewhere here. Or then we will ask ourselves, maybe since this is lower than that, should we want it to see two more? So we have this V here, and we'll wait for another one. So that will put this one higher than this one, which is higher than this one, and we will buy around this area. But guess what? When you do that, when it went up and pulled back again, this area was a little bit lower than the price paid here. So you'll still have a little bit of unrealized loss at some point. And you'll notice that even with those cautious, being that cautious, it reached a point here that the price went below this area. So if we continue going forward, let's not lose this point that we thought would be a good entry point. You'll notice that this area is still below it, so there will be a negative loss here at this time frame, and then at this time frame, when you have a positive at this time frame, you'll have positive unrealized profits in the account. Let's see. So buying it here, there will be July, so the month of July where you will be negative, and then you will be positive from July to August, but then from August to September you will be negative here, and then you will start seeing then the price will start going up. Just to see that even by trying, to buy it at an area where you won't get stuck in the trade negative before it start going up, you might end up paying a higher price as is going up anyway. While it's pulling back, it's still going up. But then sometimes the pullback might go below a certain level, and you could well pay a higher price at some point as you are waiting, to have that confirmation that, is ready to start going up. There is still a chance that you might end up paying a higher price for it. And when we compare this area to this one, it seems like if you are buying it here, you'll be paying a price a little bit higher than what we pay for $10. No, not $10 different. This is around 69 and this is around 73. Just a few dollars difference there within what, April to June. So alternatively, is because we have those two lines, and you can see that even when we are trying to avoid now buying it too early, we end up choosing a price around this support line, which is a little bit higher up compared to this one. So that is those things that I'm trying to see, okay, how can I improve not getting in the trade too early but not waiting too long to get in either, and still buy around the support line that I like to buy at. So, and if you have some ideas during this scenario that you want to point out, please feel free to share that with us in the description, in the comment, please. But yeah, it just seems like by just looking at it, this will be a good entry point, but again, this is lower than this, so you don't know if it's going to go down from there or not. It's just those things that you just don't know. But I just feel like for this time frame, when it's leaving the support line that I like to buy it at, I'll just paying attention to those red bar, and whether it's on the same direction or whether the chart change direction, I'll just compare those red bar delimited by the green bar to see if I'm seeing higher lows. If I'm seeing higher lows on the same side of the swing and I see 3 of it, I can just buy at the first or second green bar that follow the last pullback. If I'm seeing the red bar with an obvious change in the chart direction, that's fine too. I will just compare those red bar. So I think I'm going to be using either one of it, depending on the nature of the chart. If the chart is just showing those red bar on one side of the swing, or if the chart is actually changing directions when those red bars are getting displayed. So, and then over time I will see how those two strategies are helpful to get in the trade, to to buy the share around the support line without buying it too early, or buying it and then it will pull back down to a lower support line. So, but for now, it's all about making sure we choose the right support line to begin with, because this one is more like an upside wall of the mountain. It's a long support line, but it's not quite the valley, because at some point it might decide to come back to this valley line. So this is supporting the upside wall of the mountain, but it is not the valley. This is the valley. And sometimes it's by buying the stocks that you'll actually notice what is the valley, what is the support line, than when you are just observing the chart without making any purchase. For some stocks, I feel like it. So that's why I'm saying, when you are going to purchase a stock for the first time, you have not traded yet. Like in this instance, that's the first arrow we put on it. We didn't trade it last year. In instances like that, it might just be a good idea to buy one share of that stock to see, to test it, to see if your strategy is working well with that stock. Second, to see if the support line you are buying it at is actually the support line that is corresponding to the valley line or not. And then the next time, after you sell it for profit, the next time you are going to buy it again, to increase that profit, you just need to buy more share. So that is just another, maybe one way to cautiously approach swing trading. Start with by buying one share at a time, and don't aim a higher profit necessarily. Minimum profit $1 after you pay your brokerage fee. But with this long up to long swing trading strategy, your profit is going to be more than $1, because when you buy at the support line and you want to sell it at a new high, you are going to stay in the trade for longer. Therefore, you will accumulate a lot of profit. So now that we talk about the entry point, and this one we bought it already, we are going to be thinking about when we will sell it. So we'll compare where the price is, where we bought it, to when we want to sell it. And we have 3 strategies for that exit point. The first one is to wait until the next new high is reached, because we are trading upward large cap stocks. They are growth stocks. They reach all-time new high frequently. The last one was at the beginning of 2025. So we are going to wait for the next one. So when it reaches that next new high, then we'll decide if we want to sell it or stay in the trade longer. And that will bring us to the second strategy. We'll compare the last time it reached that new high, which will be around this area. So when it left where the support line that we wanted to buy at, it reached the new high around this area, November 2024, and then all the way to January 2025 and pull back. So only 4 months 2 months, 3 months or so, 2 months or so, and then it was done. So that is telling us that with this one, when it reached a new high, we are just going to sell it and get out of the trade, because if it repeated the same pattern, it may not continue reaching a new high for a long period of time. It will just wait for a few months and then be done with it. So when it reach the next new high, which is going to be more than 125, we will just sell it. So because it's not going to climb the mountain once it reach the new high for long, we don't even need to apply the other two strategy to see where we want to exit. The first strategy is enough for us. It's not going to continue climbing the mountain long once the first peak is reached. 2 months time frame is too small for us to gamble with it. Therefore, when it reach a new high, we are going to sell it and get out of it. So that is the strategy we are going to use for this one, and we are just going to keep observing it where the price is to, you know, the previous new high, and once it reaches, it's going to highlight the new highest price, all-time highest price, and we'll just sell it there. And it might continue going up for a while before it'll be ready to go down. So thank you so much for your time. And if we want to look at our record for MMC that we purchased twice this year, so we purchased the beginning of the year and we sold it. In fact, I need to take this commitment out of there because we sold it. And we sold it in March and bought it again in March. No, we bought this one and sold it in March. Yeah, we bought it again in March and sold a few days later for this profits, or 9% and 3% for the second one. So those are the two purchases that we made for MMC. And as for MVRL, we have not sold it yet. And that was the price per share we pay for it, and that is why it's selling right now. So thank you so much for your time. We thank you very much for watching our videos. We thank you very much for your time, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, Cross of Liberman Consulting, L.L.C, YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. And as you can see, we made profits selling, buying and selling MMC, and even for MRVL, we are profitable in it, even though we didn't use moving averages for those trades. We just use our support lines to buy them and use the new high as the exit point for those two. Thank you so much for your time. For more of our swing trading, for our swing trading strategy tips, will you please check the list of the playlist in the description of this video. Thank you for your time.